all of us got here because we saw opportunity, because we saw optimism. Part of this is supposed to be fun as well. It's an interesting space to be in. Things are changing, there's challenges, but when has anything that's been worth it been done without challenge?
Welcome to Spur Equity's Spur Your Wealth podcast, your ultimate guide to passive income through real estate investing. Join us as we together discover the secrets of building wealth one passive investment at a time.
From expert insights to inspiring success stories, this podcast will inspire you and empower you to take control of your family's financial future so you can live life on your own terms.
All right, welcome everyone to another episode of Spur Equity's Spur Your Wealth podcast. We are your hosts today, Budham Singh and Rav Singh from Spur Equity. And on the Spur Your Wealth podcast, we aim to bring successful investors and experts and thought leaders on our podcast to share their stories and secrets to investing so we can all stand to benefit from their experience. But today's episode, we have our dear friend and partner, Adnan Merchant, on the podcast today. Adnan is the legal powerhouse behind virtually all of Spur Equity's investment opportunities. Adnan is a corporate business and private securities attorney. He co-founded MW Law in 2017 and has helped facilitate billions in investment transactions for private equity funds, real estate syndications, venture capital, and real estate investment acquisition deals. He focuses his practice on providing end-to-end legal services for clients by assisting them in structuring private investment funds, upkeeping securities compliance, and managing investment transactions for his clients. So welcome, dear friend. Welcome, Adnan, to the Spur Your Wealth podcast. Really happy that we got to get you on the podcast finally. Yeah. So really looking forward to the conversation today, man.
Hey, thank you guys for having me. This is an absolute honor and a pleasure to be here. You guys are some of our absolute best clients, and we can't, and very dear friends as well. So we're super happy to be here.
No, great to have you on, man. So I know we're going to focus a lot on today. You know, we had a lot of questions from our investors around, you know, the legalities and securities laws and PPMs and things like that. And so we're going to get into that. But what I want to start with is really, you. I want folks to get to know you, and so give us a little bit about your background, how you got into this, you know, from law school. What made you decide to go this route? You know, in securities law?
Yeah, well, I guess it did start technically in high school when I discovered that I was absolutely trash at math, and so I couldn't be an astronaut. And then I discovered that I was actually very good at debate, so, you know, I knew I was going sort of in that direction. So my family has always done real estate investments, so even growing up, you know, at my dad's office and things like that, I was always involved in this industry from a very young age, so I knew that when I eventually got into the law and exercised those kinds of things, that I would somehow wind up in this space one way or the other. Didn't know that I would end up, you know, fully doing what I do, specifically in private securities and those things. I think those are the things that just you kind of grow into, and you got to do what you're good at, right? And you got to enjoy what you do. And so, you know, it's very fortunate when those two things can kind of coalesce, where you're good at something and you enjoy doing it. Right. And thankfully for me, because I am such a nerd, private securities ended up being those things that coalesce, and so here we are, and that's what we do.
Wow, that's great. That's great. I think you know what you mentioned regarding the fact that you kind of grew up into this, right? We all sometimes are very fortunate where you know, we end up learning a lot from our you know, just elders or from people that are involved that we are seeing day to day. You know, sometimes we may like it, sometimes we may hate it, right? And so for you, it was lucky enough for you to get into the real estate world and eventually, you know, land at what you're doing right now. I know, you know, Param already talked about it. Why? Let's talk about the why part of it. Why did you go out in your own and started your company versus, let's say, working for somebody else?
Very good question. Yeah, you know, it's also one of those things that I also grew up around, right? So my father was also a very entrepreneurial type. He did commercial real estate his whole life and built his own company doing it. And so I think I also knew at some level that I have that entrepreneurial drive. I wanted to do more than just be a lawyer in an office behind the desk, right? So doing what I do means I get to do these kinds of things like these podcasts. I get to build successful projects and be partners to people like you guys who are doing wonderful and amazing things, right? And so I think if you have a certain mindset to be an entrepreneur, to kind of really seize those opportunities, it's difficult to go back, right? I will tell you that it's absolutely scary to do so, though, and I'm sure you guys know the same, right? When you decide to leave a nice job and a nice guaranteed salary, and it's just like, hey, let's start our own thing and see where this goes. It's not the easiest couple of months, right? You never know how it's going to go. You never know where it's going to result. But ultimately, the important thing is that it's you. It's all yours, right? What you're building is it's something that you're passionate about. Your name is on it, and if your name is on something, you're inclined to do really well, or at least give it your all, right? And that's exactly what we do, right? So I think having that, especially in our community, right? There's so many people in our community that stand up and do business for themselves, and I think that that's fantastic. So coming from a long line of that is also sort of how I got into this.
That's great. So for our listeners, those who don't know kind of what kind of services that you provide for, folks like us, companies like us, and some of the investment opportunities that we put together and structure, can you tell a little bit, about some of the services that you provide your clients like Spur Equity?
Absolutely. So MW Law, we style ourselves as a powerhouse boutique real estate private. So happy to kind of dig in that. I think, we've spoken briefly about it. So I made a kind of a list for you guys as well, sort of a top 5, top 6 couple of things that people should really be kind of looking at, right? But to start, I think it's important to set context, right? So what exactly is the PPM, right? Because it goes a long way in helping to kind of demystify it, right? PPM is it's a private placement memorandum or a private placement memo. It's not an agreement that anybody signs, right? The agreements follow the PPM, which is the subscription agreement, company operating agreement, etc. The PPM itself is what we call a tombstone disclosure document, which is just lawyer speak to say that, hey, this is the document that is going to disclose and disclaim all the important material things about this particular deal. So it's certainly the document that you want to be paying a lot of attention to and making sure that you guys have understood it, or that you're as LPs, people have understood what it is that they're getting into for this deal, right? It's going to disclose things that are legal. It's going to disclose deal disclosures. It's going to disclose conflicts, all those kinds of things, right? So you are ideally looking to make sure that you've captured some of these things. So let's kind of talk about, a few of those, right? Top 5, top 6 things, right? The first thing that I think everyone should look at when they look at a PPM immediately right off the bat is, okay, what is the structure of the deal that they are proposing to us, right? And what I mean by that is, hey, is this a syndication, or are we looking at a fund? Are we looking at a fund of funds, which means our fund is investing in another syndication or fund and is not the direct deal, right?
We're the same. And so what I love about working with you is that the creativity behind how we structure every project differently and unique to that project, the PPM, the subscription agreements, the operating agreements, the whole structure of it, it's been unique to how we've, how that deal or that project has come about. So there was a huge evolution that I see in working with you in our first deal to our last one, which was probably our 16th deal or so. But that along that journey, also securities laws have changed. Yes. And interpretations of security laws have changed. And so talk to me a little bit, because we hear this a lot. Like there's a lot of firms or websites out there that offer like PPM and subscription document templates, right? That you can get for pretty cheap, and then you just fill in the blanks or whatever. But we rely on folks like you to stay in up to date on securities laws, to make sure that we are protected, that we are doing everything according to compliance and all that stuff. And sometimes those things, you don't know what you don't know, right? And so talk to me about like getting, if somebody's looking to do something like this and putting together a securities project, real estate securities or otherwise, why is it important to do the PPM the right way, the subscription documents the right way, that structure, as opposed to, sort of buying, templates, right? That you will have to do yourself.
Absolutely. Right. And I think that's a very important question. Thanks for asking. The documents, and especially the PPM, their whole purpose is to protect you, the operator. So if you're looking to protect yourself, why would you go the shortcut route, right? The whole objective is to protect you. We tell clients this all the time, right? You are not hiring a lawyer for documents Not really, right?
Right.
Anybody can get documents anywhere. Honestly, you can download documents online probably for free, or you can pay for template documents here, there, or the other. You're hiring a lawyer for counsel, right? That's what you're getting. That's what that bill is for, to be completely honest, right? We spend the time to take you through the what ifs. Have you thought about this? Have you thought about that? Here's another way to structure this. Have you thought about doing it that way? Well, this particular deal has this nuance in it. How have we captured for that particular risk, right? And as you mentioned, the securities laws are changing all the time. Just now, back in August, right, we had massive investment advisor changes from the SEC, right? And so that affects people who do fund of funds, right? And are you getting that level of counsel? Are you getting that level of protection from your lawyer, right? And that's what it is, right? So what we do as your lawyers, right, we don't just draft documents for you, although to be fair, I really love our documents because we also update those literally every couple of months, right? But it's more than that, right? We take you through the beginning and the end. And like you mentioned, no two deals I've ever done have ever been the same. So it's very difficult to say, hey, let's just take a cookie cutter approach and absolutely mimic all of our deals, right? That's just not usually the best way to protect somebody, right? So I think that can be very paramount. It's also about understanding how different areas impact you, right? You might be operating your business very different than another operator does, right? And so because of those differences, there are different ways in which we might structure this that might be better for you and worse for somebody else, right? So counsel at the end of the day, and in short, what you're looking for is counsel.
You really take the time out, in my opinion, to understand what the problem is or what the opportunity is, and then based on that, to say, hey, this will work and this may not work, and here's the reasons for it. And that's
Yeah.
something that I've loved, working with your company, just because you make it so personalized, and the fact that you make it very easy. The approach is very easy. Legality is still legality. I'm not a lawyer, right? When I'm doing something, I just want to know that somebody has my back, right? My company is safe, and my investors are safe, and they understand what they're doing. And so, in that regards, what you just said regarding counsel, it is so important to have somebody in your back who's going to take care of you, who is basically an extension of your team. That's it, period, right? And so, really, that's how we feel about you, is the fact that yes, you're our friend, and we know you personally and love chatting with you. But at the end of the day, you're our team member, right? When it comes to legal, when it comes to law, we want to make sure that those are the questions that are going to go to Adnan and his company, not something that we're going to just offer and answer solutions to our investors. And that's why we bug you all the time, and we call you all the time. So we really appreciate the fact that you take the time to explain and re-explain some of those questions to us. I really feel like that makes a big difference.
Oh, absolutely. You guys make it so much fun. You guys are all my favorites. It's all good.
Awesome. So, Param, you had a question regarding PPMs the other day when we were talking. You want to ask Adnan?
Yeah. So, as we get into this, a lot of our listeners are our investors or potential investors as well. So I think when we go through an opportunity, we obviously do the webinars and we go through detail, but at the end of the day, what they're investing in is the securities is outlined in the subscription agreements and the PPM. And so those documents, because of people like you and the SEC, can be pretty overwhelming, right?
Yes.
So we thought it would be a great opportunity for you to demystify the PPM for our investors. Like if we're going through the PPM, obviously they should either review that document in its entirety or get some sort of legal counsel on their side to be able to review it and look at how they're protected. But at a high level, what I would want to do for our investors is demystify it and say, yes, it's a long document. It's a lot of legal speak, but here are the key areas that you need to focus on to see whether, because again, they're looking at, let's say, our deal and they're looking at 3 other deals from other operators. What should they be looking at to look at obviously the risk profile or the key things that are going to impact them as investors in that project?
Yeah, I think that's a really good question, and I think it's something that your listeners can really, really benefit from. So happy to kind of dig in that. I think, we've spoken briefly about it, so I made a kind of a list for you guys as well, sort of a top 5, top 6 couple of things that people should really be kind of looking at, right? But to start, I think it's important to set context, right? So what exactly is the PPM, right? Because it goes a long way in helping to kind of demystify it, right? PPM is it's a private placement memorandum or a private placement memo. It's not an agreement that anybody signs, right? The agreements follow the PPM, which is the subscription agreement, company operating agreement, etc. The PPM itself is what we call a tombstone disclosure document, which is just lawyer speak to say that, hey, this is the document that is going to disclose and disclaim all the important material things about this particular deal. So it's certainly the document that you want to be paying a lot of attention to and making sure that you guys have understood it, or that you're as LPs, people have understood what it is that they're getting into for this deal, right? It's going to disclose things that are legal. It's going to disclose deal disclosures. It's going to disclose conflicts, all those kinds of things, right? So you are ideally looking to make sure that you've captured some of these things. So let's kind of talk about, a few of those, right? Top 5, top 6 things, right? The first thing that I think everyone should look at when they look at a PPM immediately right off the bat is, okay, what is the structure of the deal that they are proposing to us, right? And what I mean by that is, hey, is this a syndication, or are we looking at a fund? Are we looking at a fund of funds, which means our fund is investing in another syndication or fund and is not the direct deal, right? So there are so many different structures that people employ these days to do these kinds of investment deals. All of them have great benefits. All of them also have cons, right? And so it's very important that the first time you look at a deal, you're understanding, hey, what exactly is this deal? Is it a syndication? Is it a fund? Is it a fund of funds? What are we doing here, right? And again, we can certainly have much lengthier conversations about all of these things. I think for now, let's just at least make sure that those couple of things are captured, right?
So if I may just ask a follow-up question
yeah.
on that, just to make it easy, right? What Param and I do in terms of when we have our webinars and we have a pitch deck is really marketing at that point, right? We're basically trying to explain to our investors and potential folks who want to invest that this is what the deal is, this is what the structure is. But at the end of the day, the legality, the legal document that describes in detail what that structure might look like is what is going to be in the PPM that you're describing.
Exactly.
Right?
That's a very good point, right? The PPM should match whatever it is that the marketing is telling you as well, right? The PPM is the official legal disclosure document, right?
Okay.
So very good point, right? The second thing that I want people looking at then is obviously the deal economics. And again, this is another one of those areas, Rob, as I think you mentioned, absolutely, it should match up what you're being told by the sponsors, right? So the PPM should also tell you, hey, are there various investor classes here? And if so, what class of investment am I looking at doing? What are the economic terms? Are there preferred returns or not? Are there, what is a waterfall, which is what we normally call, which is the profits distribution, the split of profits, right? If we end up making $100, how are we going to be splitting that $100 amongst all the investors? What share do I think I'm going to get it, right? Does it all really match the underwriting, right? Does it match up with what I'm being told? Things like that. And then also one of the things that's key and critical that you want to look at, and I know you guys do this in all of your deals because we've talked about it all the time, but when you have capital events in your deal, do you have a step in the waterfall that says, hey, if it hasn't happened, we want to make sure people are getting their money back first, right? I don't think the importance of that can be stated enough. The best of the best sponsors like you guys often have those kinds of provisions in your deal. And what it shows is that you guys are committed to them, right? You're committed to your investors. You're making sure that your investors are also taken care of. And I think that that's worth pointing out for you guys specifically, right? And then the third most important thing that I think everybody really needs to be looking for are what we call affiliate transactions, right? So in many deals, and it's perfectly okay, by the way, to do this, but in many deals, the sponsors might also have their own project management company. They might have their own construction company. They might be brokers on the deal. In fact, a lot of that are positives, right? It means that if those same services are in-house, there's efficiencies, right? There's great things to be looking at. But you always want to be aware of affiliate transactions. It's when those things are not disclosed that we get into issues, right? So are they engaging themselves for any of those services? If so, what are they paying themselves for those services? Because you have to remember as LPs, that's part of your money. That's where your money is going to. Going to fees, including affiliate fees. So what are affiliate transactions on this deal? Have I looked at those? Am I okay with those? Do I understand that? Are they paying themselves market or at least something that's justifiable, that's reasonable? Then great. Then we're okay here. We know about it. And now we're going to do the deal, right? So too many times we get, a lot of sponsors that sometimes tend not to disclose those things. And we have to tell them as counsel, you really need to be disclosing any and all conflicts, right? It's very important that your investors know exactly what you're doing in this deal and how those kinds of affiliate transactions are working, right? So that's definitely one of those most important things. The next few things I think are one of those things that you may want to be talking also to a lawyer about or talking to an advisor about as you're looking at it, but they are important nonetheless to look at. And the first of those is let's talk about lending and financing, right? Is there a senior lender on the underlying deal, right? What are those terms? What kind of interest are we all collectively now paying for this project, right? Are there personal guarantees? Am I being required to personally guarantee? And the answer should be no if you're just a straight LP, but we want to confirm those kinds of details, right? We want to be looking at the documents and making sure that that's not happening. Are you being personally underwritten by any lender? Normally that's not the case unless you own maybe 20% of more of any particular deal. But those are just the kinds of things you also as an LP want to be looking at, making sure they're in the document to your satisfaction. And the most important thing with all of these things is if you have questions, you should have a direct line to be able to talk to a sponsor and ask those questions, right? If you're unable to get in touch with the sponsor, that's probably not a great sign, right? I know Rob and Param do a fantastic job of being available to their investors all the time for questions, things like that. And that is definitely something that you want to be able to have open access to. The next one is definitely just deal diligence. And this is something that also Rob and Param help with, and they make sure that their investors know about, right? What is the property? Location, right? Where is the property? What are we doing with this property? What's the project plan? What are there environmental risks? Is there is there asbestos in the walls that we need to know about? Do we know any of these kinds of factors, right? Because ultimately you're investing in real estate, right? And if you're investing in real estate, those are important questions to understand to the extent we have those answers for you, or that your sponsors have those answers for you to be able to get that kind of information, right? What is your commitment term in the project, right? How long are you going to be expected to have your money tied up? Because you got to remember, especially in syndications and in funds, they're commitments, right? You can't just expect, 6 months from now, if you feel you want to be let go, that you can just get your money back. Most of the time, right, that's not going to be the case. So make sure you're aware of what that commitment term looks like and that you're comfortable with those kinds of liquidity terms and things like that, right?
So Adnan, just let's pause there because we do get that question especially from newer investors, right? That like, hey, because they're used to liquid or semi-liquid, type of investments like a CD or, like a REIT where there's a once a month type of liquidity option. Whereas the real estate syndications that we're doing, there's a runway there, right? There's a 3 to 5 year runway potentially, and then depending on where we are, like for example, there were a couple of deals that we were supposed to exit this year, but it's not the best year to exit, so we're going to carry those forward. And so, there is these are all projections, but like everybody's along for that ride as long as it takes us to get there, right? And so I think that's one point that we try to hit, at least on the webinar, right? That, hey, we're modeling this for a 5-year window. It could happen before, it could happen after. And so you have to be ready to be along for that ride. And it's not impossible, but it's not easy to say if somebody, again, life happens. And, for us to be able to swap out or change or refund or any of that, it becomes extremely challenging to figure out ways to do that. And how to quantify that and how to do the paperwork. Obviously, we leverage and lean on you to help us through a couple of those scenarios. But I think it's really important for investors to recognize that this is not a liquid opportunity, that it's not like stocks, it's not day trading, it's not anytime I need the money, I can sell it off and whatever that value is and get that back. So, and a lot of the documentation, the subscription agreements and the agreements kind of spell that out, but, people need to understand, the mechanics of that. I think a little bit, just because it is a different vehicle of investing than they're typically used to.
Yeah, and exactly to that point, right? There's not just there's two reasons, right? And there's a very important two reasons. The first, as you mentioned, of course, are market conditions, right? These are illiquid investments. Once we make the investment, you have invested it in a real estate acquisition and an undertaking. That means the money has been spent. We're waiting on a capital event, which is we're going to sell this property or we're going to recap the property or whatever it is before we're going to see that level of money again, right? And market conditions absolutely are going to impact that, and people really need to be aware of that, right? I mean, look, today, where we are in the capital markets, right? As you mentioned, it's not the best time to sell for a lot of folks, right? Which means you're going to be extending because you're doing what's in the best interest of everybody. And that's important for investors to know, is that commitment terms are meant to be expandable, right? They're meant to be flexible depending on what is happening, because you are acting in their best interest, and you've got to be able to make those decisions. But more than that, there are even legal restrictions, right, to being able to resell these things. Shares and interest that people buy in these private placement deals are by definition what the SEC calls restricted securities, right? That means for the first 12 months, regardless of anything else, they cannot be resold to a third party. So it's not just that, hey, my sponsor is being unreasonable. No, there's actual legal restrictions on these things too, right? That come into place. And as you mentioned, the documents will spell those things out. But ultimately, I completely agree. Investors who are investing in private placements in real estate really have to understand the long-term nature of these investments, right? There's potential for great rewards in this industry. There really are, but it does require this extra level of patience, persistence, of diligence, all of these kinds of things that come with it, right? Absolutely.
Right. Yeah. Yeah, definitely go on. I know you said you had 5 main
Yeah,
things.
6, and the last one that I have then is sort of the wild card. It's part of what we were just discussing, but it's legal diligence, right? So this is definitely something that you should be looking in the documents from a legal perspective to kind of make sure. And just, short form, there are a couple of things, right? We sort of very briefly touched on this, right? But when you take somebody's money, Rob and Barham, and you are a sponsor and you're a GP, you're a fiduciary, right? That means you are responsible for their money and investing it and taking the best actions in everybody's interests, right? There are some sponsors out there that in the documents, they will simply write that they are waiving fiduciary duties, right? And look, that's not to say that it's neither bad nor good, but the truth of the matter is, you want to be trusting somebody with that money. You want to make sure that that money is going to be in good hands, right? And so just look out for those kinds of things as well. Know who you're investing with, know who you're trusting with, and make sure that they take that fiduciary responsibility as seriously as you guys take it, right? I know that you guys take it very seriously. We've had conversations where you guys have been willing to fall on the sword before letting investors feel anything, right? So I know that you guys are very good about that, and LPs should, likewise always do that kind of diligence with any sponsor that they're investing in, right? Is the sponsor planning on filing securities notices, right? And those are very important ones. Some sponsors tend to skip crossing the T's and dotting the I's when they put these packages together. Well, unfortunately, that can open up the project and everybody in it to risk, right? From the SEC or from regulators or government authorities, right? So you want to make sure that the sponsor is who their legal counsel is, and are they doing all of the things correctly from a legal perspective? Are they filing the notices? Are they taking care of the blue sky fees? Are they doing the Form D? Are they doing all of those things? Because they also intend to be fully above board, and they intend to follow those procedures and minimize that risk from a securities perspective, right? So that's what it is, right? Are they disclosing all those things to you? Do you see that they're doing those things and that you're satisfied with it, right?
And that last point, going back to the previous kind of, as we were walking through your services and why we're using you, I mean, those are some of the things that we rely on. So, for example, if somebody's going and getting templates of PPMs and subscription documents, they will do that, but then they also have to make sure that they're above board on SEC filings and Form D and Blue Sky and all that stuff. And so we feel really good because, one, we have your team that's on top of all of that, and we don't have to think twice about it. Like they a good counsel will take care of all of that. And in some cases, there's yearly filings that we have to do, right? And so knowing when you have to do that and when you don't have to do that and what you have to do to stay above board and in compliance, that's invaluable, right? That's that. And so, getting, a good team behind you when you're putting these projects together is really imperative, so that, you are in compliance and you can rest easy, right? That we're doing everything in the right way, right? And not cutting corners in any way. So that's a good point.
Yeah, absolutely. Sleep better at night, right?
Yeah, absolutely. So we know you're really good at what you do, right? Which is on the law side. But we also know that you grew up in a family where you were also taught and you saw investing and being an entrepreneur from that angle. So I'm just taking a hunch. I'm also assuming that you also invest in projects. And if you invest in those projects, and given where the market is today, I'm curious to just learn from you and understand how things are changing in your world. When you're looking at projects, when you're underwriting these projects, what is it different that you're doing today than what you were doing maybe 12 months from today? Or what do you think that, based on anticipation of where the market will be, like, how are you pivoting? How are you changing your strategy? Tell us, as a non the investor versus a non the attorney, and let's kind of focus a little bit and maybe spend 5 minutes on that. And we'd love to learn from you and see, what are some of the opportunities that us or our investors, could learn from you.
Yeah, well, then definitely disclaimer: this is absolutely not investment advice.
You must be a lawyer.
As a lawyer, I
There's
had
some
to,
lawyers
right?
on the podcast.
Exactly. We have to do it, right? I think that the first thing people need to understand about markets, and especially today, is that these markets are cyclical, right? These things have happened before. Yes, it's definitely different because we're coming off of major stimulus from COVID and things like that. So we've got a lot more money in the market than maybe we did. So yes, there are nuances, but by and large, it's going to be cyclical, which means there's a downturn, there's going to be an upswing, right? The question is when. The question is all about timing and exactly what those triggers look like, right? I don't know if you saw this, so stick with me for a minute because I think this analysis is fairly telling, right? The third quarter GDP numbers were released a couple of weeks ago, right? And it showed a 4.9% GDP growth, right?
Yeah.
Which is pretty stellar given where everybody else thinks we're supposed to be in the market. But I don't know if you guys saw this, but a part of that was consumer discretionary spending, which, by the way, was made up in part by Taylor Swift's Eras tour, Beyonce's concert, and the Barbie movie, right? So what is that telling you, right? To be honest, I'm not actually sure what that's really telling us, but this is what I think it's telling us, right? And this is also supported by a lot of data from large private equity groups, right? There is so much capital sitting on the sidelines waiting, right? There are hundreds of billions of dollars, in fact, more today in dry powder reserves than there have been in the last, call it 24 to 36 months, right? So all of that capital is out there and it's waiting to enter this market, right? And I think what we have to ask then is, okay, well, what is it waiting for? And while we might never actually know the exact answer until we just see these things happen, I think what it's waiting for, and I know this because I've got clients like you guys, I've got clients who represent a lot of that money, right? We've been structuring a lot of funds for them, right? There are blind pool funds that are just taking capital as commitments and just waiting. They're waiting. Because what's going to happen at some point, because again, this is cyclical, what's going to happen is at some point the market will correct. Sellers are going to start reducing prices. It's going to start coming down. And then what's going to happen simultaneously is, and I don't know if you guys know this as well, I think you guys do for sure. I know Rob does. There is more debt coming due in the next 12 months than there has been in the last, some 30 something months combined, right? Like, it's an enormous amount of debt that has to be serviced right now, which means it's either got to be refied or it's got to be paid out. And this is not the best market for it, which means that a lot of that's going to start going on a fire sale, probably in the next 12 months, maybe the next 16 months. If I were to guess, sometime late next year, mid to late next year is my best guess. I could be totally wrong, and I'm going to need everybody listening to your podcast to sign a disclaimer for it. But that's what's going to happen at some point. Maybe it's 12 months, maybe it's 16 months. All of this is going to come to a head, and assets are going to go on sale, and clients like you guys, other clients that we have that have structured these funds, you guys are going to have a field day because you're going to go raise all this capital, and you're going to buy all of these assets on sale before others can get to them. That's what I think is going to happen, right? So in short, I still remain very bullish on real estate, right? I think commercial real estate is still a fantastic asset class to hold. I think it's just about surviving until the when. I don't know when the when is. Yeah. Maybe sometime Q3, Q4 of next year. I think when the when might start, just because of those debt due dates and that capital waiting to come in. But I think we'll see, and maybe we'll do another podcast around that time and see how wrong I was.
Yeah, for sure. I think that's a great analogy what you just put it. Market is what the market is. I mean, there's no up market, there's no down market, in my opinion. It is what it is, right? And so you're either a buyer or you're a seller, depending upon which side you're on. And there's a lot of money that's sitting on the sidelines right now. We know that. I see it. I speak to a lot of investors. I speak to a lot of folks, who are, in it, and they're waiting or they're waiting for an opportunity, whatever it is. We just tell people, hey, look, you can't go back. And you don't have a crystal ball, right? So you don't have a projection in terms of, you could think whatever. You and I are thinking what may happen in 12 to 16 months, right? But would it happen? Would it not happen? We have no idea, right? Yeah. So I just tell people that, if you see a deal in front of you, execute. If you think the numbers work for you and your investors, execute. Move forward. There's always a correction. There's always a decision that could be made later on, because you can't time the market. And so, but yeah, there's definitely opportunity. We feel that's coming, and we're preparing, and some of our investors are preparing for it. But at the end of the day, there is no horizon, right? Where we can say, look, after 3 months you got to do this, or after 6 months you got to do this.
Yeah, you got to evaluate now, right?
Yeah, you have to evaluate now and play the market the way it is.
Yeah, and for what it's worth, right? A good deal today is not the same as a good deal was 12 months ago, and that's okay. And people need to recognize that, right? Have to recognize that, right? It's a different market. You can still make great opportunities in a market like this, right?
And the thing I love about, and we did the same thing, right? Like we had an outlook of, doing X number of deals this year, but market correction happened, or whatever happened with the market.
Yeah.
But that didn't stop us. Like, we still said, okay, we're still going to do deals, but we're
Right.
going to get creative. What works in today's market, right? What risk profile do we want to look at, right?
Right.
And so there was different things that we ventured into. So the thing I love about, going back to the point about like how you structure our deals, for example, like we get creative in how we structure our deals going forward based on sort of evolution. So same thing on opportunity side. How do we structure, or, how do we acquire and look for opportunities that are going to work in today's reality? We ventured into the industrial fund. We kind of sidestepped multifamily for a little bit. We're still bullish on multifamily, but again, we're talking to investor sentiment. And so when they're hearing all these news, we're like, all right, let's go with a lower risk profile product, which is industrial. It's predictable. It's got a predictability curve into it. We know what we're going to make, and so we did that. And so I think it's not about standing and waiting for an opportunity. It's about creating opportunity. And so there's people that take action and find opportunities to get creative and putting deals together are going to come out whole. I feel like we're going to come out whole on the other side, because we're again, there's still plenty of opportunity out there. It's just a matter of finding it. But you can't. I personally think, like you said, like, the market's cyclical, like it changes. But if you're still going to do the things that you did 2.5 years ago and expect, the same thing to happen, like people made so much money in multifamily over COVID. Well, those days are not here today, right? Like, you have to structure the deal really, really solid on an operations side, right? Squeeze every last dollar out of the deal to make returns, rather than riding that COVID appreciation that everybody did, right? And so it's a different world, but you can still make money. Commercial real estate is definitely something that we're bullish on, of course. And so we just have to find the deals that make sense.
And you guys do such a good job diligencing the deals that you come through, right? I think that's key, and I think people should really understand how important that is, right? You don't say yes to everything. You guys look at things, you understand what it is, you've understood the diligence,
Yep.
You've done the homework, and then you guys decide that, yeah, there's a creative way to do this, let's do it, right? And that's something that I admire about you guys too.
Yeah,
Great,
thank
man.
you.
Appreciate that.
Yeah.
All right, so that's about the time that we have. But before we sign off, Adnan, any final thoughts or final pieces of wisdom that you can share with our investors as they either are, along the journey of their investment career or just about to start? What kind of advice can you share? Disclaimer aside, right?
Definitely buy a couple of more Barbie tickets. No, I'm kidding. No, in all honesty, I wasn't suggesting that a ticket to Barbie is the same price as a multifamily investment, although with popcorn these days, it's probably about the same.
Yeah,
right?
exactly.
No, I think what I would say to people that are in this space or getting into this space, don't lose the optimism that initially brought you here. I think all of us got here because we saw opportunity, because we saw optimism. And I don't want people to lose that along this journey, right? Part of this is supposed to be fun as well, right? It's an interesting space to be in. Things are changing. There's challenges. But when has anything that's been worth it been done without challenge, right? So don't let those kinds of things dissuade you. Don't let those kinds of things take away from the optimism you feel about this industry. Yes, do your homework. Yes, absolutely surround yourself with a team of experts that can help you. Don't do it alone. But don't lose the optimism. I think that's probably what I'd like to leave you guys with. I know it's a little cheesy, but I think it bears worth mentioning.
No, I love it. I mean, and just very personal for me, because Rav and I actually started a journey many years ago in real estate, and we didn't do as well as we thought we would, right? This is back in the 2008 bubble or before that, right? And so we got burned a little bit, and it took us a long time to get back on that horse, right? And I wish we had, like kind of heated advice, like you just said, like it doesn't matter, if you get burned, like get back on, right? Because there is value there, right? And so it took me a long time to really go back and say, okay, let's try real estate again. And I'm so glad we did, because here we are. But there's going to be ups and downs, but again, do your homework, surround yourself with people that are smarter than you. And, we certainly did and got to where we are. And it's not to say that every deal that we did is a home run, right? Obviously there's going to be challenges along the way, but at the end of the day, this is still the area that we feel like this is going to help our family the most. And so we're going to continue to push that. But yeah, I mean, I think that advice is great, especially in today's market where people are seeing and hearing challenging things, but through challenge, there's opportunity.
I agree. Keep moving forward. That's it. Just be positive, keep moving forward, figure out how to get stuff done and how to just keep moving forward.
Yeah. Well, great, man. Thank you, Adnan. This was really, really helpful. I know that we're going to have you on again. I'm sure there's going to be follow-up questions from our investors on, more stuff around the SEC and documents and things like that. So again, appreciate the time that you took to speak with our listeners. And I welcome another opportunity like this. And if folks want to get some one-on-one time, I know that you make yourself available. We'll definitely route people your way if they need your services and stuff. So really want to thank you for joining us today, man.
Don, how do they get to contact you? If you can kind of.
Oh, sure. Yeah. The best way is definitely going to be email. I am a stickler for emails. I make sure that I flag everything that comes in. And so email is going to be the best way. It's just Adnan at mwfirm.com. You can find us at mwfirm.com and find all of our info and contact info there. So definitely that's a good way. And again, super honored to be here. Thank you guys for having me on. It's always a pleasure. And yeah, man, anytime you guys want, I'm super nerdy about it. I love talking about it. So happy to do so.
Awesome.
Great.
Awesome. Great.
All right.
And to our listeners, thank you for tuning in to this episode of the Spur Your Wealth podcast. Again, we are your hosts, Banam Singh and Rav Singh from Spur Equity. And so remember that your journey to financial freedom begins both with knowledge and action, where knowledge is power.
But action is superpower. So until next time, happy investing.
Thank you for joining us on this episode of Spur Your Wealth podcast. We hope you enjoyed the valuable insights and inspiration. Don't forget to subscribe to our podcast and stay updated on future episodes filled with actionable tips and strategies.
If you want more information about our investment projects, visit us at spurequity.com. If you have an inspiring story to share and would like to be a guest on our podcast, email us at podcast@spurequity.com. Until next time, happy investing.